Hey all, good morning and welcome to ShareTrack. This is Raj here, 29th of September 2022, almost 7:30 a.m. in the morning. I'm really happy to report that we have finally managed to break through the 658 subscriber barrier and we are on to 660. Thanks to the 2 subscribers who just pushed us across. We need at least 2 more so that we don't fall back into the sub 660 range. So let's hope for the best. Anyway, I'm gratified with that. So with that said, let's get started with our morning show. Welcome back, friends. I'd like to first start off with addressing the situation in UK. When the UK government announced that the tax cuts would happen without cutting expenditure, it led to bond buyers selling and dropping the value of bonds significantly. And this caused problem for pension funds who hold bonds in their portfolio. And I believe that the bonds almost fell 50% in value. That was a big wake-up call for the pension funds. And also when pension funds lose value, it's very risky for the government because all the retirees are going to be up in the arms. In response, the Bank of England launched a historic intervention to stabilize the UK economy, announcing a 2-week purchase program for long-dated bonds and delayed its planned bond sales until the end of October. And friends, those of you who have been watching this channel always know that when a government decides to sell bonds, what it is trying to do is to mop up the liquidity. And when it starts buying bonds, what it tries to do is to put money back into the market. When the government starts buying bonds, the price of the bond goes up. When the government starts selling bonds, the price of the bond goes down. So what happened right now is that the central bank was forced to start purchasing bonds in order to prop up the value of the bonds in the pension fund. So basically, it seems like both the government as well as the central bank are working at cross purposes here. The central bank is correct in trying to raise the inflation rates and stop purchasing bonds and mopping up all the liquidity in the economy in order to curb the inflation. What is wrong here is the government's approach of cutting taxes and infusing liquidity into the market. And when a government cuts taxes and it does not cut its expenses, what happens is international bondholders who hold bonds in that nation get to understand that the government is going to get into a fiscal crisis, and therefore they would consider the quality of the bonds to be dropping, and therefore they would end up selling the bonds. And that's what happened with the UK. Even the ex-governor of the Bank of England, Mark Carney, came out and said today that the government is working at cross purposes in the central bank. The only positive out here is that even though Liz Truss was on most of the radio channels today, giving interviews and defending her decision to reduce taxes and also further tax cut going forward, she conceded that interest rate setting should remain independent. So that's the only positive news I have. I believe that the central bank action will prop up the bonds. However, this will compound the inflation problem. People have to vote for keeping in mind the future prospects of the country rather than prejudice. I think British problem started with the Brexit issue, where it was an emotional decision to get out of Britain, not considering the problems it will create with the already settled Good Friday Agreement and the Northern Ireland border, not keeping in mind how it's going to impact the trade alliances that were forged with Britain through the European Union, which will all break as soon as Britain exits from the European Union. So all those things were not considered. People voted rather emotionally, and as a result of which we have the Brexit problem simmering in the bottom. And at this point of time, because of the onset of COVID at a strategic moment, people lost track of the Brexit issues. And then we had political instability and the passing away of the monarch and the change of leadership both in the government as well as in the monarchy. All of these things will just fade into the past in another few months, and Britain is going to stare fairly and squarely at all the problems that has been created due to Brexit. And it's going to take them a lot of time to get back on the saddle, because worldwide we have recession going on. Worldwide we have central banks tightening up and mopping up liquidity. And there's a realignment and more of a polarization in the world, and as a result of which forming new alliances are going to be easy if you're willing to be saddled into a smaller orbit of influence. Whereas if you want a global influence, it's going to be very, very difficult. So let us see how Britain handles all of those. Meanwhile, one of the most exciting product rollout I have seen has come from Amazon yesterday with its QLED TV, the Amazon Fire Omni series in QLED. I believe is going to be a game changer for Amazon. Aside from its QLED display, the TV has Dolby Vision IQ and HDR10 plus adaptive for the first time. This helps to improve the picture quality, especially the separation of the darks in scenes where it might be otherwise hard to see everything on the screen. And the adaptive brightness feature means the picture adjusts if the room is overly bright by the sun or in a dark room. This feature is there in many high-end TVs at this point of time, but I'm really excited by the fact that this also includes interworking with Echo and built-in Alexa, and includes Alexa widgets. It can turn on and off when someone exits or enters the room. The TV can also act as a piece of wall art when it's not in use, thanks to a gallery of famous landscape paintings. Similar TVs have been in the market for a while from big brand manufacturers, but they have been very expensive. I believe Amazon has priced its TV at the lower end at $799 US. I think it's almost 40% lower than the competition for all these features. And as an Amazon shareholder, I see this as a great revenue stream, and I'm really pumped up with that. And also, I would like to bring to your attention that Illumina has informed that its inaugural Illumina Genomics forum, being held in San Diego from September 29 to October 1, is already sold out, and they're making arrangements for further audiences to have a look at it through telecast media or something like that. The speaker lineup includes former President Barack Obama, Bill Gates, 23andMe co-founder Anne Wojcicki, and tennis legend and cancer survivor Chris Evert. I believe she was called Chris Evert Lloyd, but the press release just says Chris Evert, so I think I'll use that name. I believe this can raise the profile and name recognition of Illumina and its offerings. However, the Grail acquisition issue needs to be resolved before Illumina can find its true potential. That is my personal opinion. Now let me address my concern with the market. Yesterday, I expected the market to fall after 10 a.m. or latest before close. We are clearly in a bear channel and no good news around. The market is not following any logic, and therefore it is difficult for me as a content creator to confidently make any conclusions. I believe that even you guys are finding it difficult, regardless of however much you read up on all the experts and watch whatever videos. Nothing seems to work. I think today the market has to fall and probably recover a little before close, because it's a dead cat effect I talk about when the markets fall. So having gone up yesterday, it's supposed to fall today, and maybe towards the end of the day or early tomorrow it will probably recover a little bit. But we are still firmly in a bear channel and no positive catalyst. I don't know what will actually happen. We'll see what happens and learn something from that. But let's look at the pre-market action and see how it looks like. It's almost 7:50 a.m. in the morning right now, and I think it's time to look at the TradingView platform. Let's do that. Well, friends, here we are in our TradingView platform. I'm looking at the Nasdaq futures. And yesterday, for some reason, we managed to break through the diagonal line of resistance of the bear channel. And today, we were still trying to break through this horizontal line of resistance, which is at 11,597. But it has pushed us back yesterday, and it has pushed us back again today. And we also have the resistance from the 10-day simple moving average, which is sitting at 11,616.60, which is this yellow line out here. So those are the twin resistance that are pushing us down. And at this point of time, I would definitely say that this diagonal line of resistance of the earlier bear channel has now become a support for us. And we are in a new bear channel until we start breaking through this horizontal line of resistance at 11,597 and closing the day above where we ended yesterday. So we have to close above at least 11,602 today in order to get into a potential bull channel. With that said, the MACD is looking bearish, but it's tending towards a signal line. Momentum is down, but it has improved from the 30% that it was in. It just bounced off the 30. We decided not to go below that, and we are back up again, and it's coming down. So let us hope that we find a change of course today and try to create a new bull channel. But right now, pre-market, we are down 1.08% from where we ended yesterday. So Nasdaq future is definitely showing a bearish trend. In terms of indicators, you have US oil, which is up 0.51, and it's facing resistance from the bear channel resistance out here, which is this red line, and it's getting some support from the 10-day simple moving average at 81.88. Pre-market, we are up 0.48%. MACD is just about to cross over to the bullish side. Momentum is still below average, so I wouldn't worry too much about it at this point of time. QQQ is down 1.07% pre-market, and we have a support out here, which was at 278.43, and we broke down below that, and therefore it is now a resistance. And at this point of time, market is at 276.91, and if I look at this particular line of support, it's at 273.52. So this is going to be our first line of support. Our pricing is somewhere out here, and today our resistance is going to be 278.43, failing which we have resistance at the 10-day simple moving average, which is this yellow line, which is sitting at 282.81. MACD is still bearish, and momentum is sharply picking up. It bounced off the 30%, but pre-market we are down 1.06%, so it's also showing a bearish open. S&P 500 is down 0.77 pre-market. We went below the 30% in this case, and we bounced back up again. We didn't test the support line, which was at 24.62%. So we bounced up before that. It shows a good amount of strength. So I hope we continue the upward trajectory, but pre-market we are already down 0.77%. And we have a resistance out here at 369.94, which we had broken yesterday, but we have fallen back firmly again. So that continues to be a resistance. And our line of support is at 358.47. Russell Industrial Average is at minus 0.81 pre-market, and it's going to have a resistance from 172.14, and it is going to have a support from 166.19. So that's what it's looking like today. And we bounced off our support, which was at 24.35%, and it shows a good amount of strength because we have bounced back up again. So I'm hoping that this strength will continue regardless of what we are seeing negative out here. And our MACD is still bearish. So let us see what the day holds for us. Since yesterday we had an unprecedented jump without any positive catalyst, I am thinking that we are going to give back those gains today. We'll see what happens when the market opens. I've been proved wrong before. Let's look at Dow Jones Industrial Average. It's down minus 0.59% pre-market, and our resistance is a strong resistance at 301.49, which is the confluence of a horizontal line of resistance as well as the 10-day simple moving average, which is this yellow line. So this is a joint resistance out there, and our support is going to be at 292.70. And after that, I would like to look at VIX. The VIX is today within the range of yesterday, but it's much more subdued. VIX is up 4.04% for today. It had ended up at 30.22 yesterday, and it's gone up today, and it's presently at 31.41, but still it is within yesterday's range. And our line of support at 33.77 now becomes a resistance, and that's where it's likely to meet its first challenge. But looking at the MACD and the momentum, I think the VIX is only going to go up, which means that the indices are going to fall. US dollar index is up 0.11%, but it is still firmly below the diagonal line of support from a previous bull channel, which is now a line of resistance for us. And the MACD is still bullish, but the momentum has fallen from being overbought, and it's the RSI has fallen from being overbought, and it's still at the upper end. So I could see a little bit of horizontal movement or sideways movement, and potentially support from the 10-day simple moving average at 13,367.7, which is this yellow line, failing which we have a diagonal line of support out here, which should give us a support today at somewhere around 13,272. And right now we are at 13,442.42, which is an increase of 0.10% or $12. That said, let's go and have a look at the index movers. I'm just going to move some of these upwards so that it's easy for us to see them as soon as we come into this grouping out here. Just moving the index movers up there into sequence so that we can be done with very quickly. So we have our Microsoft, which is down 0.90%. It has broken below the line of resistance out here, which happens to be at 238.81. Right now we are at 238.90, so I'm not going to mark this as a support as yet, but we are almost at the resistance level and knocking at the resistance first thing in the morning. But we are already down 0.90% from where we ended the day yesterday. We ended the day at the top here, so we already fallen down here. So we can assume that Microsoft is showing a bearish trend. Netflix is down 1.17. Sorry, I don't want to see Netflix. I'll push that down here. Apple is down 2%, and its next support is going to be out here, which is 137.41, which is a line of support. And I'll also draw another line of support out here. If you recollect, earlier we had removed lots of lines of support in order to clear up the chart. So I have definitely got a line of support out here at 142.27, which is going to be providing some support for us. And our MACD is bearish and momentum is below average and pointed downwards. So I think Apple is also showing a bearish trend this morning. And Amazon is down 1.03%, and it's already fallen down from where we closed yesterday. And it's got support. I need to draw a new line of support out here. I think I could probably see a line of support out here, which it has fallen, which is likely to fall down to, and this is at 115.05, and this could potentially be a line of support for us today. And MACD out here is bearish and momentum is picking up, but it's below average. Google is down 0.91% pre-market. It's around 7:56 a.m. this morning, and we are likely to see more drops as far as Google is concerned, because the MACD is bearish, momentum is still below average. So I can't confidently say that we are going to pick up out here, because pre-market we are already down 0.91%. I don't know what's going to happen in the market, because it doesn't follow general logic at this point of time. If I was to look at commodities, wheat has gone up 1.79%, but I think wheat is still in a bear channel. You can see this bear channel. If I draw it out here, you'll see it. And I'm just going to change the color of this to green, because it's a support line. And I'm going to draw a upper channel out here. So this is the bear channel that we have, the line of resistance. And when it comes to copper, again, copper is also in a mildly bear channel. So it's up 1.08% today, but likely to go down again because it's being pushed by the 10-day simple moving average. Let's go on and have a quick look at Genomics. And in Genomics, DNA has done way better. It's come up to 20.07%. And let me look at news, if any. There is no news out here to make the move. So it's just the market whims and fancies. And pre-market it's down 3.46% already. PSEB was up 11.43, it's down pre-market 1.88%. Invite was up 11.02% yesterday, it's down 2.29% pre-market. Caribou Biosciences was up 7.74 yesterday, it's got no trades pre-market. Illumina was up 7.73% yesterday, it's down 0.83% pre-market. ArcG was up 6.17% yesterday, no trades pre-market. Teladoc was up 5.90% yesterday, and pre-market it's down 1.10%. Bluebird was up 5.87% yesterday, but it's down 2.25% pre-market. SQZ was up 5.58% yesterday, but no trades pre-market. Editas was up 5.51% yesterday, no trades pre-market. Beam was up 5.39% yesterday, no trades pre-market. CRISPR Therapeutics up 5.20% pre-market, 5.20% yesterday, but no trades pre-market. Intelia was up 4.68% yesterday, 4.66% yesterday, but no trades pre-market. IDNA up 3.26% yesterday, but no trades pre-market. Allogene was up 1.51% yesterday, already down 0.61% pre-market. Verve was up 0.58% yesterday, no trades pre-market. IMTX was down 0.11% yesterday, no trades pre-market. And friends, as you can see, the normal course is always that if you have a steep hike a given day without any catalyst, the next day it's likely to fall down. And if you have a steep fall on any given day without any catalyst, then it's likely to have a dead cat bounce up and then give up the gains. So basically, it's the market trying to find some price point which is an equilibrium, and failing to find, so that's why it goes up and down in an erratic manner. Right now, I think we are stuck in a great deal of panic in the market. The VIX is quite high, so at this point of time, it's very difficult to make any predictions on what's likely to happen. What I'm seeing in the market right now is a tendency to go down, being bearish, which is in line with the fact that it went up sharply yesterday without any catalyst. So I like what I'm seeing here. It's an attempt to balance itself, but I can't guarantee that when the market opens, we won't have an upward movement, because at this point of time, the market is acting very irrational. I didn't expect the market to be up as much as it did yesterday without giving any gains. And today I expect the market to go down, but I can't guarantee anything because of what happened yesterday. So with that said, my friends, I think you got to be just careful with the market. If there is any bottom, there is always a dollar cost averaging. If you have some profit somewhere, it's a good opportunity to sell a call or book the profits. That's my personal opinion, not financial advice. That's what I would do personally. Please do your own due diligence before making any decisions like that. With that said, I would like you to press a like if you like the video out here. And if you're not yet subscribed, please subscribe and help me grow this channel. I want to reach 1,000. It's a long way out there, and the markets are generally putting us in a pessimistic mood. But friends, keep it separate from your feelings towards this channel. I'm just the messenger. I'm not bringing the market down. I'm just the messenger. So if you feel like subscribing, please subscribe. Do not hesitate. Thanks and have a great day. Bye for now.